Presented by eBix Cash. हर खुशी के लिए काफी है.
Hello and welcome. You're with us on Business Today. I'm Abha Bakaya. Here are the headlines. Market gains for second straight day. Nifty reclaimed 17,450. Sensex up 657 points, led by banking, auto, IT and metal stocks. Bond markets remain steady as the Monetary Policy Committee's two-day meeting wraps up. Majority of economists expecting a hike in reverse repo rate. It's a Business Today TV exclusive. Government likely to consider calling fresh bids for state-owned Bharat Petroleum if present bidders do not move forward with financial bids. Delhi's iconic Ashok Hotel set to be leased out by the central government. Sources tell Business Today TV the proposal is to be taken up by the Union Cabinet soon. Finance Ministry acknowledges capital gains tax regime is too complicated. Revenue Secretary says laws governing profits from stocks and property to be simplified soon. And Prime Minister Modi's big interview on the eve of first phase of crucial assembly elections says the government has no business to do business. Instead, its job is to think about making life better for the poor. Benchmarks gained for a second straight day. Sensex and Nifty rallying as investors awaited the outcome of the RBI's policy review due tomorrow. Sensex gained 657 points to end above 58,400. Nifty 2 topped 17,400, rallying 197 points as bulls made a comeback on Dalal Street. Gains were seen across sectors with financial, auto, IT and consumer stocks being the biggest movers. The Nifty rally was led by Coal India, which was up over 5%, followed by Maruti Suzuki, Hindalco, IOC, Shree Cement, all up over 3%. Top laggards in trade included ONGC, Bpcl, ITC, SBI Life and Tata Steel. On the other hand, despite volatility, retail investors have kept faith as data released by the Association of Mutual Funds in India showed that systematic investment plan, the SIP contribution grew to a fresh all-time high of 11,516 crore rupees. The total number of SIP accounts topped the 5 crore mark for the first time in January. The three-day RBI Monetary Policy Committee meeting will conclude on February 10th. Market participants have said that the huge borrowing program announced by the government in the budget may prompt the central bank to hike the reverse repo rate. My colleague Sakshi Batra joining us now. Sakshi, tell us why the RBI may go for a hike in the reverse repo and not the repo rate.
Well, that's right, Abha. All eyes are on RBI's first monetary policy review, and that is post the budget 2022. And this review may actually indicate the way our own home loan and also car loan rates may go on from here on as well. Remember that the RBI has kept the policy rates unchanged since May 2020. You have a reverse repo rate of 3.35% and a repo rate of 4% since May of 2020. Now, soon after the pandemic had hit us in 2020, the RBI began slashing rates and inducing liquidity to support the economy and growth, which actually led to a low interest rate scenario and regime. But 21 months and 3 COVID waves later, the scenario is much different. Growth is coming back, economy is reviving, but the RBI faces many challenges at this stage. To start off with, we do see that the budget has announced huge borrowing program of over 14 lakh crore rupees for FY23. There are the concerns on the crude oil prices and the rising inflationary pressures as well. We are also seeing that the Fed has also announced tightening of liquidity measures and of interest rates as well, and all of which may prompt the RBI to go ahead with its policy normalization plan, and the RBI may now hike the reverse repo rate as a measure of liquidity management. Now, leading brokerage houses, rating agencies estimate a 15 bips to a 40 bips hike in the reverse repo rate, which is the rate at which the RBI borrows from banks, although the RBI may hold the repo rate for now.
Also, take us through the key impact of the policy on both the economy and the common man.
That's right, Rabha. We'll first of all look at how the commentary of RBI is on policy normalization and policy stance as well. If there is a change from the accommodative stance to neutral now, then it will indicate the RBI is perhaps more open to more interest rate hikes going forward from here. And this will eventually help in controlling inflation, which has been on a rise. With budget focus clearly on growth and capex, the RBI may now shift focus on reining in inflation. Now, comments on the timeline of the launch of the digital rupee will be definitely a key highlight that everybody is looking at. Other details about what the CBDC will be all about, this will also be important to track. This will also push further on the government's aim of digital payments in rural areas and also further curb the black money usage in the country. Now, we will also look for RBI's comments on supporting the bond market, which has been jittery quite a bit with yields rising effectively, making it dearer for the Indian government also to raise funds. Now, economists are looking at the RBI to really announce some open market operation purchases to calm the bond markets at this point in time. As for the common man, well, till the time the RBI does not hike the repo rate, we don't really need to be scared of the higher loan rates, whether it is on home loan or it is the auto loan. If the RBI raises the reverse repo rate this time around, as is expected, this will prompt banks to park more funds with the RBI to earn higher returns on their excess funds as well. And this will result in banks having lesser funds to extend as loans and borrowings as well to consumers, and therefore the liquidity in the system will reduce. All in all, this will be an important event for the stock markets as well to chart its direction going forward from here.
Sakshi, thanks so much for joining us with that. Now, time for a Business Today TV exclusive. As per sources, the government is likely to invite fresh bids for Bpcl if no financial bids are received in the current round. Talking to Business Today TV, Managing Editor Siddharth Zarabi at the India Today Roundtable, DIPAM Secretary Tuhin Kanta Pandey made it clear that the divestment of the petro major is not on the back burner, but financial bids have not come in yet. So far, 3 companies, the Vedanta Group, private equity firm Apollo Global and I Squared Capital's Think Gas arm, had all expressed interest in buying the government's 52.98% stake in Bpcl. The government was hopeful of executing the sale by March this year at a $13 billion valuation. Let's go across to Karishma, who's getting us all those exclusive details. Karishma?
Well, we need to understand that Bpcl's sale has been a complex process, and that is also because of the various variants of COVID-19. While the government was expecting to close the process in September 2021, rather it is because of the Delta variant, the process was pushed, and about after 4 extensions on EOIs, finally the bids had come in. Again, the government set a new deadline of completing it by March, but was not able to pull it because of the kind of EOIs that came in. While there was a lot of expectation that global energy giants would bid, that did not get through. And now government is keen that in case a consortium does not take off, then the government may look at this option of calling in EOIs again, which will be the second round of expression of interest. Parallelly, Abha, like you also mentioned, that DIPAM Secretary in a conversation at the budget roundtable also mentioned that it is also because of the green energy issues, the transition to green energy and the climate change issue, the carbon issue, that major giants have probably not were not interested in order to put their investment in Bpcl. So various factors, but government is still hopeful that in their revised target, in their estimated target of 65,000 crore next year, they'll be able to pull off Bpcl.
All right, thanks Karishma for that. Now let's listen in to what the DIPAM Secretary Tuhin Kanta Pandey had to say.
Well, I think it's been really caught up in energy transition, I think so. Because, we had the bids, initial bids, the qualified bidders, but we want them to come ready for the financial bid, and we are getting a little bit pushback on this. So, as I said, that you need 2 hands to clap in a competitive bidding process. We are taking process forward. There's nothing on our side. But I think it's a bit of a oil sector and the coal sector and the carbon economy and so on. And this ticket size is very large in this transaction.
Now, you won't have too much longer to wait for the IPO of insurance behemoth Life Insurance Corporation of India. Yes, the great Indian IPO is here, with sources telling your channel that the draft red herring prospectus may be filed tomorrow. Let's go across to Karishma once again to get more details on this. Karishma, what have you picked up?
Well, right, Abha, like you just said, the great Indian IPO is just probably a month away from coming to its implementation and a day away for its prospectus to be filed. Sources from Finance Ministry have told this to us. In fact, at the budget roundtable of the India Today group, DPM secretary also mentioned this, that the embedded value is upwards of 5 lakh crore, and seeing that it could be 3 to 5 times the total value, LIC stake sale could bring about almost 15 lakh crore on table for the government of India. Besides this, of course, government is also looking to offshore 5 to 7% of its shares for the shareholders, and the 20% FDI, which is the second part of sale, will also be happening soon. So the great Indian IPO just days away from its launch.
All right, one that the market is keenly anticipating. Thanks, Karishma. Now we get you yet another exclusive. DPM Secretary Tuhin Kanta Pandey was at the India Today Business Roundtable, where he told Business Today TV's managing editor Siddharth Zurabi that the embedded value of LIC could be more than 5 lakh crore rupees. Listen in to an excerpt of that conversation.
The great Indian IPO is slated for March, and our DRHP will be filed this week with the SEBI. Going by the fact that policyholders have taken, have really blessed this organization for a long time. We want them to be the stakeholders, shareholders, and possibly, they will be also offered discounts.
Once listed, will LIC be amongst the top 3 companies in India by market cap?
Well, I think, as I said, that our embedded value is upwards of 5 lakh crore. So I think people are making guesses. As I said, that this is the early stage of marketing in this IPO. And once the DRHP is filed, that I think price will be discovered over the period.
New Delhi's iconic Ashok Hotel is all set to be handed over to a private player in the next few months. Business Today TV has been exclusively told that a proposal for leasing out the hotel for a period of 60 years has been prepared and is likely to be taken up by the Cabinet Committee of Economic Affairs very soon.
Situated in the heart of Delhi, right in the middle of the super posh diplomatic enclave. A perfect luxury destination for those travelling on board the Maharaja in the Nehruvian era. Today, the landmark 66-year-old Ashok Hotel is showing its age. It's past its prime, a lot in part due to government mismanagement over the decades, gross negligence, and an all-pervading VIP culture. Spread over a whopping 25 acres, once frequented by top celebrities in the country, the hotel could once again be a top destination. The central government, which runs the hotel through Indian Tourism and Development Corporation, is all set to hand it to a private company. Sources say the proposal to lease out the hotel is prepared and is likely to be taken up by the Union Cabinet soon. The proposal entails handing the management of the hotel to a private company while the government retains its ownership. The Finance Ministry plans to raise as much as 88,000 crore rupees this year by monetizing assets like roads and highways, railway land and trains, and other government properties. The target is to raise 6 lakh crore rupees by 2025. The Tourism Ministry has proposed to only lease out the hotel and not the adjoining land. The land parcel of around 22 acres will be developed separately as a premium residential complex and a shopping complex. Hotel Samrat, which is located near the Ashok, will also continue to be run by the ITDC due to its proximity to the Prime Minister's residence, a sensitive location that demands high security. With Karishma Asudani and Chetan Bhutani, Bureau Report, Business Today TV.
Capital gains tax could be in for a huge overhaul. Addressing the industry at a CII conference, Revenue Secretary Tarun Bajaj today said the government was looking at untangling complicated capital gains tax regime. According to the senior finance ministry official, authorities are already looking at various options and changes in the laws can be expected very soon.
For real estate, we have made it 24 months. For shares, we have made it 12 months. For debt, it is 36 months. So we really need to work out on that. And what you are also now saying is that for sale of the industries or the maybe the real estate linked to the industry, that also should be covered in the capital gains. I think this is another work in progress that I would look forward to your views. But I would also say that I would request CII to actually see what we have actually seen. We have done some work on this to see what is the rates, what are the periods in the elsewhere in the world, including our nations of our kind and also the developed world. I think a lot needs to be done. The problem is that when we do something, some of the people will be losers as compared to what their provisions presently are, and some would be gainers. So that becomes the most difficult part.
The Supreme Court has issued a notice to Future Group on a plea by e-commerce major Amazon. Amazon went to the Supreme Court against the Delhi High Court order, staying arbitration on the Future Retail Reliance merger deal. The Apex Court will next hear the matter on February 23rd. Godrej Properties Board has approved a preferential issue of 5 crore warrants convertible to equity shares to entities related to Rakesh Jhunjhunwala and others. This issue translates to 9.98% shares in DB Realty. Logistics services provider Express Bees has bagged a funding of $300 million at a valuation over $1 billion in the Series F round. The Pune-based startup has now entered the coveted Unicorn Club. The latest round was led by private equity funds Blackstone, TPG and Chris Capital. Glenmark Pharma has rolled out India's first nitroxide nasal spray named Fabi Spray in collaboration with Canadian pharmaceutical company Sanitized Research and Development Corporation. Fabi Spray is used for treating adult COVID-19 patients who are at high risk of progression of the disease. Mirror, mirror on the wall, who is the richest Asian of them all? Well, had you asked this question yesterday, the answer would have been Gautam Adani. But the Reliance chief is here to take his crown back. Yes, Mukesh Ambani has toppled Gautam Adani to regain the status of the richest Asian. Take a look at what's going on in the elite billionaire club.
It is the clash of the billionaires. A day after Gautam Adani overtook Mukesh Ambani as the richest Asian, the top boss of the Reliance Industries has regained the status as of February 9, 2022. Mukesh Ambani is in the 10th spot on the Bloomberg Billionaires Index global list with a net worth of $89.2 billion. Ambani's net worth has eclipsed Gautam Adani's $86.3 billion. While the two Indian industrialists are head-to-head in the billionaire race, they have taken over Meta's chief Mark Zuckerberg after his net worth took a beating after Meta stock plunged post the dismal earnings in the fourth quarter. But India's two richest businessmen are on the same page when it comes to green energy. Both Mukesh Ambani and Gautam Adani have pumped in big bucks to take India's renewable energy industry to the next level. The Green Knights aim to accelerate the renewable story with a cumulative of $30 billion investment. Meanwhile, the electric car king, Elon Musk, sits atop of the Bloomberg Billionaires Index with a net worth of $238 billion. The other members of the elite billionaire club include the likes of Jeff Bezos, Bernard Arnault and Bill Gates. Bureau Report, Business Today Television.
Get ready for another hike in term insurance premiums. Thanks to COVID, life insurance will be costlier very soon. What's more, getting insurance, both life and health, will be more difficult, with insurers ramping up checks and medical tests.
High fever, crippling body and joint aches, sore throat and racking cough, which lasts weeks. These are not the only after effects of COVID you have to deal with. Get ready for a serious hit to your financial planning as well. The first wave of COVID hit the nation in March 2020, resulting in an 11% rise in life insurance claims for the financial year. The telescopic effect was, however, felt the next financial year with a 40% jump in claims. The official figures for the current fiscal are not available yet. Industry sources estimate a 200 to 300% rise in 2021-22 because of the second and third COVID waves. The massive surge in claims, which the industry had not budgeted for, has put pressure on reinsurers as well. While some of them have reportedly exited the market, several have hiked their rates by as much as 40%. This, the industry feels, will directly result in a hike in term life insurance premiums.
I don't think the prices have yet reached a stage where we can say that now they are stabilized or prices shouldn't go up further. I think this industry is still assessing that, and we should see another wave of price increase. And having said that, the underwriting controls will become stricter, because you only want to give insurance to people who actually can be insured, and not buying it at a stage where they're expecting that to happen anytime soon.
The other big impact of COVID is stricter medical examinations of the applicant. Not only this, those who have suffered from COVID have to go through a 3-month cooling off period before they can apply for a term policy.
As we speak, we kind of keep getting a lot of data. Basis that the underwriting controls are kind of firmed up. Now that we are seeing the third wave, we are seeing that anybody who's gotten the infection recently will have to wait out for another 3 months before they can get a term insurance policy.
Interestingly, the impact of the pandemic on the all-important health insurance plans is minimal. Even though hospitalization claims have risen, there has been little or no pass-through in premiums. However, general insurers are seeking a 3-month cooling-off period for the COVID hit, applying for a fresh policy. Bureau Report, Business Today Television.
And that's where we leave it on the show tonight. Thanks so much for watching.